Hello everyone and welcome to today's video on Brent Crude entitled Are Production Cuts Working? This comes following the meeting today of the Joint Ministerial Monitoring Committee. This is a number of the producers that are taking part in the output cut, which now runs till the end of the first quarter of 2018. They were assessing how the cuts are performing and having discussions around that. I just wanted to provide an update really on how that meeting went, the commentary that we had from oil producers that appeared at the meeting, and any update. Now, I think it's worth noting that, as you can see from the chart, we've seen a slight uptick in Brent crude and the same in WTI crude on the back of the meeting, which suggests that traders didn't take too much away from it in terms of new information. But there were some interesting comments which I just wanted to run you through just to provide that little bit of an update and maybe give any suggestion as to, firstly, how markets perceive the production cuts to be going, but also how producers perceive it too. The Saudi oil minister Fali said if there's any consensus for the need for an extension of the pact beyond March 2018, they'll be supportive. They're also of the belief that the production cuts are having an effect, albeit maybe slower than what they previously anticipated. There has been reports also that they are cutting exports to the US because they believe that the market is paying too much attention to the oil inventory numbers from the US and not taking into consideration what kind of an impact it's having on output globally. So potentially trying to impact trader behavior there. They're clearly not happy with the levels which we're currently seeing prices at, currently not achieving their objectives. Novak, the Russian oil minister, has claimed that compliance with the output cuts is at 98%, which is a little bit down on what it was previously, but very close, of course, to the 100% which they're aiming for. They said the committee's recommended an extension if needed, but all countries should show 100% compliance, and this is potentially a stumbling block in terms of future deals, because we are seeing signs that countries are struggling. There's a couple of countries which have already reduced their cuts, or at least one country that's reduced their cuts, and others could follow as a result of the difficulties which it's having on their budgets. They said that there's a deal reached with Nigeria to cut by the same levels as others when reached, although there has been other reports that they will just maintain levels once they reach 1.8 million barrels per day. Now, this is the ongoing story about Nigeria and Libya, both of which have been increasing output and are not part of the deal because they have faced issues at home in terms of output, already having significantly reduced output as a result, and they want to get their levels back to where they were previously before taking part in the cut. Nigeria looking to reach output of 1.8 million barrels a day, and Libya targeting 1.25, currently at around the 1 million mark. Now, this has contributed a lot to the additional output though which we've seen this year. Together with the US, Libya and Nigeria have both upped output quite considerably, offsetting a large amount of the actual cut that's come from the rest of the OPEC countries, which is one of the reasons why oil continues to linger around these levels. Yes, we're not back at the kind of $28 a barrel level which we were at the start of 2016, but we're still in this very clear $45 to $50 range, and until we see a breakout in either of these directions, obviously, without stating the obvious, it looks as though markets are content with these levels at this moment in time. A break above 50 and really above 50.80 hopefully, but above 50 would suggest that the markets are starting to buy into this production cut, and maybe the figures are suggesting that the market is returning to balance again. The likes of the Saudi oil minister and others are confident that we are going to see output return, we are going to see stocks return back towards their 5-year average. And in fact, Novak, the Russian oil minister, said that cuts have helped clear 350 million barrels of additional supply since the start of the year. So there is clearly some impact. The question is, are traders convinced? And at the moment, they're not. The final comment we had was from the Kuwaiti oil minister, and he said that the next monitoring committee is scheduled for the 21st of August, so a little under a month, but then another extraordinary meeting could be caused if necessary. So there's clearly a commitment from producers, and this was one of the issues that was talked about previously about the potential for the deal to work was going to be compliance. Well, compliance has clearly been high. Some countries, of course, are being pushed to their extremes in terms of how far they can go, but at the moment there doesn't seem to be any issues. The only issue so far is that markets remain unconvinced, and output in other countries is still rising. But there wasn't really too much of a reaction in the markets today. Oil's up around 1%, but considering the just the decline alone on Friday, that's not really too much to read into. Again, I'm not seeing any reason why we're to expect a break below 45 or a significant break below 45 or above 50 at this stage. This series of possible higher lows could put a little bit of pressure on the upside here in the medium term. But then Friday's candle here does suggest to me that this is just a pairing of those losses as opposed to anything else. So I wouldn't be surprised if we see a bit more downside action before we do see another move on that 50, if in fact that is what we're going to see. So the up-to-date today really is that there's no major update. There's been a lot of commentary. There's been a few details released, but overall it looks as though it's just steady as she goes in terms of in terms of OPEC and non-OPEC producers, and it does seem that they are open to an extension, but there's no talk of a deeper cut. So I think what they're hoping for is that with demand increasing, and I believe demand will increase by around 1.5 million barrels a day in the second half of the year. I think that's one of the expectations in terms of the market coming back into balance, is that while they're reducing output, while it may not seem enough at the moment, the demand factor should start to come into play as well. But again, I'm sure we'll hear plenty more over the coming weeks and months. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.